Hey everybody, welcome to Trading Capital. I'm your head market analyst, Curtis Scouten, and jumping right into PayPal, one of the new positions that we just started today. We're going to be discussing in this video PayPal, the profits on NUE, potentially Google as a setup, HCA, and a couple trade alerts and some positions that we currently hold and things that we're looking to start to accumulate now. So PayPal we bought today around 86.66. It did go a little bit lower than our order, but that's okay. It's just a started position of 1% of our portfolio. It is now at a level to start accumulating. When you look at this drop, the fact that this was your COVID low and you were all the way at a double top here of 310 and now you're at sub 90, that is impeccable. That truly is. But now you're coming into this double bottom support. So in theory, the double top kept this pattern in check from going higher. So now the opposite potentially and has a high probability of holding true. If this double top kept this pattern from going higher, this double bottom has a very, very high chance of keeping this pattern from going lower. So the moves to the upside and to the downside like to happen in symmetry, and this would be a fully measured move to the upside, and this would be a fully measured move to the downside. The double top held. Will the double bottom hold? I think it's very likely, at least for a bounce. That being said, you have the double bottom. You also have this key gap fill. That's where we pretty much picked up today. Started accumulation on there. We could not pass up on this gap fill on PayPal. It was a tremendous, tremendous opportunity to buy. But one of the key trend lines that I want you to observe is basically this trend line over here. So look at that trend line. So you have this pivot high before breaking out, then you retraced, hit this trend line as support and bounced off of it before you had your really big breakout. And then when you go look and zoom in on the chart, essentially you tagged it here and PayPal had its huge bounce, which we played. We sold at 117. And now look, 2 weeks later, we're still in the same month of April. The beginning of April, PayPal was at 123-ish, and now it's sub 100 at $86. You came into that key gap fill, which is this green buy zone that we bought today, and you have this trend line as support. And then right at the second bottom green line where we'll look to accumulate more is this double bottom. So you have tons of support areas. When PayPal is down 71% from the highs, you have to really start looking at it and saying, okay, is this company still producing revenue? Are they still producing profit? What does their future look like? They're ultimately a fintech leading edge. I think there could be more downside, but eventually they're going to turn around and have those big bounces and pops. It's certainly heading into the oversold territory once again. But the fact that I love swing trading because we just got this trade, we ran it up for 2 weeks and now it's gone down for 2 weeks and we can pretty much buy it at a sweeter level than what we originally made profits on, which is just remarkable, which is really, really remarkable. So looking at the next chart, NUE, congrats. We took profits on NUE today. That was an easy 8%. Well, I shouldn't say easy. No trade is easy. You have to always have execution at the end of the day and trust in the charts and the technicals. And the technicals, once again, proved to be correct. They're not just lines on a screen that some people like to think. You have this 1, 2, 3 pivot tops. Look what you ran into yesterday. This is, and need I remind you, this is just yesterday and today's price action. We pulled this NUE short yesterday. We had a couple different levels and we were hoping to get filled at 190, but it just missed it. But nonetheless, we got filled here at 184 and then a couple down lower. Overall, our average was 183.2. And look at the drop. Even though it reported strong earnings, you still had this stock underperform. Excuse me while I just get some water. All right, and we're back. So congratulations on NUE. We covered this short today, and considering the fact that we executed this short yesterday and we banked a healthy 8%, just over 8% in one day. Now we could have held this short a little bit longer to squeeze out an extra 3 or 4% upside, but nonetheless, I will take 8% over a course of one day, no problem. This stock is still considered a strong equity in an uptrend. It is overbought. This could simply just be a overbought pullback before it starts to proceed higher. Now, I think it has potentially a lot more downside, or there is downside in the future, but you never know with these commodity plays. But this is why I love technicals. Some people say technicals are hokey pokey, you can't trust them. I certainly trust them, and more of my trades work out than not. And that's the main thing, right? If until the point is proven that the technicals don't work, where I start executing trades based on fulfilling the TCT method and ultimately managing the risk in terms of position sizing, then until that strategy is proven otherwise, I'm going to continue following. And look at this technicals. 1 pivot, 2 pivot, 3 pivot highs, 4th pivot you came into yesterday, had the pullback. We shorted at 183.20 and 185.10, and look at this pullback. We covered here on this red line because we're coming into some support. We banked over 8%. We could have banked roughly 11 to 12, but nonetheless, I'm not greedy. That's a one-day trade. This is still a strong equity, so you could hit this wedge pattern and bounce. And potentially I may look to re-short it if it has a retrace of the highs. But look at this nasty topping tail. Okay, so I love weekly topping tails. They are one of my favorite signals in overbought equities on a time count with higher than usual volume. It is a very powerful candle formation, this weekly topping tail. So typically what we see, or what we can see, is a retrace. And since we put in a weekly topping tail here, what I'm going to look for next week, if we get a retrace of 50 to 75% of this candle, be ready. I'm going to pull the short yet again on this trade. And the beautiful thing is that you have such a level here is the wick high. That's where you put your stop, just above it, so that if for some reason this went away on you, you just quickly stop out for a loss. But the probability suggests that when you have a weekly topping tail, you often get a tremendous more downside ahead. And I just wanted to take my profits and run, but it is very likely to see that retrace happen. And that'll be a very good area to potentially add to or pick up the short again and kind of do a rinse and repeat process. Let's look at STNE. So StoneCo, one of those emerging market plays. Let me just get rid of this. I don't know what's going on here. There we go. Sorry about that. So StoneCo STNE. We added here our first position. We're inching in at 959. The beautiful thing is that this stock is down 91%. Well, about 90% from its highs. So when a stock, an equity, is down 91% from its highs, and this is going to be a little bit of a percentage learning lesson, educational information session for the new members and anyone that is still gaining experience in the equities and fixed income markets. When a stock is down 91%, okay, and let's say you were an investor and you bought all the way up here, and now you're down 91%. Let's just say you're down 91% in your position, or even 85%, or even 80, or even 70% on your position, and you're holding. You're like, nope, it's going to come back around. I'm a hodler, or I'm a long-term holder. So you think, okay, to just break even, it has to rally 91%. Well, that's actually not true. From the lows, if you were to have to get break even, look how much the stock would have to rally. Basically, just over 900% for you to break even. That's the power of buying at the lows of the stock. We only need it to bounce a very small amount for us to significantly net a lot of profit. So when you have this descending wedge formation into major oversold territories, coming up into the largest breakout volume candle that this stock has ever had in its history, which was basically this double bottom zone gap up, you naturally think, okay, now that we've filled the technical gap, you're coming into this major support area where people were once again comfortable buying the stock, and I think you're going to have potentially a repeat. I mean, just this move alone in the course of, say, a week was 86%, okay? That is truly powerful. And now the crazy thing about this stock is when you look at these movements, so you've had this initial flush down and you've had this bearish consolidation trying to break above this 50. And then you flushed down, you had another attempt at it and failed. And then you had this hard flush for several weeks. And now you've come back down to a level here with significant volume breakout. You've penetrated the 50, you confirmed above, but failed to hold the 50-day at this point. But notice the trend here is here you failed, here you failed. Now you actually broke through, held above for a couple days, but sold off. Now it stands to suggest that the next time you actually challenge this 50-day moving average, you're going to hold above it and start forming a basing formation off of this pattern to potentially go higher. And it doesn't take much for this stock to double and you significantly net a strong profit. Okay, so now do I think it's going to double over the next 6 months? You know, anything could happen, but I'm probably not going to be in it for a double. You know, if we get some sort of crazy rally like this, then potentially, you know, it is an emerging market play. So we have to understand if it's a Brazilian-based company, so we have to follow a little bit in terms of what the economic policy is happening in Brazil. But they have high inflation. They're notorious for stimulating their economy as much as they can, just like all of the governments around the world, abusing the fiat monetary system. So STNE is another one. Google I want to keep on the radar. The reason I'm eyeing up Google here is you've had a tremendous hard sell, down over 18% in the course of, say, 2 weeks. And you had this bear flag pattern which broke. The pattern does suggest that it has potentially a little bit more lower to go. But nonetheless, heading into earnings, I love it when these big cap techs sell off because it, in a way, it lowers that expectation of the company to do well. Typically, the markets are pricing in an already bad earnings report. So when the bad earnings report comes, the stock doesn't really react much more to the downside because it's already priced in. And the opposite is true. Is if it's already priced in and let's say Google all of a sudden surprises like Tesla, then you could see a rip, a complete reversal to the upside. So starting to accumulate these big cap tech names into oversold short-term levels is key. You're coming up into major technical levels here. Notice how you completely broke this triple bottom area. And I don't really like triple bottoms. I've said it in previous videos. They typically break to the downside. As triple bottoms, you got to think of a level of support or a support trend line as glass. Every time you hit it, it shatters. Came up and then you hit it again, it shatters. You kissed it. And the third time you hammered on this piece of support, it broke, and it significantly broke. So that's how what the technicals and the often the double bottoms, triple bottoms, quadruple patterns tell you. They all mean something different in the context of how it's forming. And look at this gap fill that you filled here on a technical basis, completely ripped through that level. It looks like you want to come fill this gap down here around the 23.48, and then you also have a short-term gap down here. I don't think you go down to this one in one straight shot. There's a potential you flush early on in the week on Monday, Tuesday, and then have, I believe, a relief rally into earnings. Or the stock could have a rally into Monday. Who knows at this point? But it certainly is getting a little oversold. You've made a new low. You've taken out your key pivot lows that you have been trading above since July of last year. So almost 1 year you've been trading up above this range and you just broke it. The question is, will you confirm on Monday below this trend line of support? It's certainly looking probable. With the 4% sell-off today, Google would have to have a big reversal to maintain and negate this pattern from clearly dictating that there's higher probability of going downside. So let's wait for confirmation. You likely get it. The confirmation could be into this gap fill on Monday, and then you potentially look to bounce into earnings. The earnings for Google is on the 26th, so that is the Tuesday. So that would kind of line up with what I think may transpire. Is Monday, you have that final drop down into the gap fill and potentially close in and around these lows here. And then Tuesday, you potentially could have a bounce if earnings are, say, not that bad, but yet the stock has fallen 18 to 20%. So keep Google in mind. I am day trading Google at the moment, or I'm looking to also accumulate a little more of a swing trade position, potentially Monday, Tuesday, as it is getting a little oversold. This stock is incredible. HCA Healthcare reported earnings today and got demolished. Down on the day 21.82%. I did play it in the day trade room for a small gain, but now it's starting to get interesting for potentially a swing trade bounce. So this stock, you have to keep in mind, it does have wild swing healthcare stock, but nonetheless, healthcare industries typically still do well in times of economic decline because it's one of those staples that people still need. Governments still have huge budgets for healthcare. So it's typically more of a defensive play. But nonetheless, it did get shredded on earnings. And honestly, it wasn't even that bad of an earnings. I think it was basically the CEO giving bad forward guidance for the stock, blaming on inflation, COVID, all the same catalysts that all the other CEOs and CFOs are blaming their forecasts on. So it got completely demolished. Look at how you broke one level of support, two levels of support, and three levels of support here. You completely filled this gap. That was a huge technical area that a lot of people were lurking and waiting for. And look at the damage that you did. You completely obliterated that gap. Now, there's a potential that you come down to fill this gap, but this is in huge support right here. This is an area where I do like, and potentially we could see a sharp bounce off the into Monday. I am looking to play this as a day trade as well, but potentially as a swing trade nonetheless. So look at these pivots here that we have. I just want to see which one's the most. That was the one. This is the one that's the most accurate. So you have 1, 2, a kiss, 3 pivots, points, and look what you're hitting today. You know, can that get any cleaner as a technical formation? And I was so disappointed though, because we had a short trade at this 282.89 level. And the reason why we had our short level there is because you had this trend line going back, once again, the technical resistance from 2015 connecting in to this 2021, 2021 again, and 2022 today. But simply a trend line is not enough. So yes, you do have a level of resistance to trade against, which is key. But secondly, when you notice this price action here, this choppy price action at the all-time highs of the stock, that's concerning. You should be concerned as an investor. The way that this pattern forms means that there's heavy distribution happening in the form of more downside pressure occurring. And notice these wicks, these topping tails forming one after another right into key levels, as this looks like more like a distribution pattern from an institution or a fund unloading stock as the stock potentially became more overweight in their portfolio due to it being at the all-time highs, paying a healthy dividend, etc., etc. But the fact that this formation here is called a broadening formation, it's at the top of the all-time highs of a stock. A broadening formation is never good to see. It means that you're likely going to break to the downside, and the downside very quickly. And that's certainly what we saw today. I was looking to short it at this level. We just missed it. I probably should have been such a stickler on the price, but nonetheless, that would have been a sweet short trade in one day that we potentially could have made. But this stock completely hit its support now into the broadening formation. We've had here 1, 2, 3, 4, 5, 6, 7, and now 8 times. You know, you have 4 pivots on this side and 4 pivots on the upside that you can trade against, acting as support and resistance. So the question is, now that you're into support, I do think there is a favorable bounce to occur. Notice you've had a bounce off of this trend line here, over here, over here, and over here. So until proven otherwise, I respect the levels of support and resistance. And as a day trade, the beautiful thing about playing these support levels, even as a swing trade too, is now you have a very tight stop loss technical level to trade against. So for instance, if you did take this as a swing trade, you can put your stop potentially under these lows here. If you were taking as a day trade, again, you just day trade against the low on the chart that is made. And when you look at the intraday action, what was curious about it is when you flip to this intraday action here, you had hard selling all day long. You know, it just was relentless. You had your gap down, and then it was just this complete selling, unloading. And then at the final candle of the day, you had this huge volume breakout on the intraday basis. So that kind of leads me to suggest that there might be likely probable upside on Monday within the form of this big green candle occurring. When you look at the spiders on the intraday, the opposite is true. My volume isn't coming up right now. Why isn't that coming up? Let's look at the SPY. Okay, so I gotta put my volume back on. There it is. So when you look at the spider intraday, and then this is the post market, this was the closing candle. It had a huge volume spike to the downside, a red candle. But when you look at HCA, if I can just find it again, oh, there we go. When you look at HCA, the opposite. You had a green candle volume spike. So it favors that there is potentially probable upside on Monday for this stock, as it is into oversold support. And on a one-day shot into support like that, it does favor a bounce. These are the type of trades that you look for as a day trader and a swing trader. When something hits support very quickly and hard and fast, is the best way that you could ask for a potential trading opportunity, because this is an impeccable move to the downside in such short affair. And you know, if you go on to the 2-hour chart, you're on a 1, 2, gap down, 3, 4, 5, 6 2-hour candle time count, and that should prove to be that there's enough there to have somewhat of a small bounce on this stock. Let's look at natural gas. Actually, we'll show you the spiders intraday. The selling on the spiders is truly phenomenal. If you notice the type of selling that occurred on the spiders starting today and yesterday, look at this selling that occurred. It's just this complete downside move. There was really no buying pressure that could lift this market, which shows you that when there's this almost like this tight movement of the price action, this tight range of the selling, it shows that this is institutional based selling, because to keep price action in such a narrow controlled range is very difficult. It means that big money in this downtrend was dumping hard into every single share that was being bought, but it wasn't dumping as hard as it could have. It was dumping at a pace that it didn't really freak the retail markets out, and it suckered in retail investors to buy the potential technical intraday levels for a bounce trade, which pretty much failed at all turns in the market. So this tight range of selling, you have to recognize that the type of selling that this pattern is caused by is clearly institutional money. And this probably comes on the back of Jay Powell announcing that the Fed is looking to potentially even tighten even faster now, and because inflation is truly a problem. So ultimately their whole plan hasn't changed, and the markets shouldn't have freaked out. We were positioned accordingly for the markets to fall, and obviously to fall a lot lower, but it doesn't fall in a straight shot. Typically, I don't like these big freak out news-based events because it shows that is unstable, not smart money. Whenever you have the markets move, 3% down on, say, even a Fed meeting, on a news-based event, when realistically everything that Jay Powell said, we expected and knew. At least I knew. Trading Capital and our members were able to position themselves accordingly based off of what the Fed minutes have said, previous meetings. Nothing he really said has changed in terms of what their plan is. So the fact that this rocked the markets and moved them so drastically shows that, yes, people are still not positioned correctly, and that ultimately these high beta PE stocks are going to see some more downside, but it doesn't happen in one fell swoop. And certainly when you see a 3% down day in the S&P, you have to be concerned.